well, they insure your house in case there's a loss. If there's a loss that you pay it off to build it up. So the goal is to have as least amount of houses being, I guess, lost to whatever.
Hey guys, Lucas Smith here again with an amazing podcast with my friend Gary Yao. And we have a special guest today, so I'm just going to let everybody introduce themselves. Gary?
Okay, I get started. My name is Gary Yao. I'm real estate agent for San Gabriel Valley area from EXP. Nice to meet you all.
I'm Aaron Rosen, owner of ARC23 Insurance Services. We're an insurance agent and really consider myself an advisor and just try to provide a lot of advice.
Perfect. Thanks for joining us, Aaron. I really appreciate it. So we're going to peel back the onion a little bit on insurance. And I know a lot of folks out there have a lot of questions about insurance. So I hope people get some good value. And if we missed something or didn't, put it in the comments below when you see this post. Reach out to one of us. I'm sure we'll be glad to put you in touch with the person who can take care of that or answer that question. All right, Aaron, I got a couple questions for you, and Gary and I have touched on this in some of our previous interviews. So one of the problems that we run into in real estate lately in the last couple of years is we've had clients who call us and say, oh my gosh, my insurance just canceled and I can't find a new homeowner's policy. Why is that happening to people?
Good question. All right, so why? And we've got to peel this back a little bit. So let's go back to, we go back a long ways. There's something called Prop 103. Prop 103, I think, was passed back in the late 80s or early 90s. It is a law that does not allow insurance companies to increase rates more than a certain percentage each year unless they can justify the rate increases. Okay. So for a long time, that justification number that they're allowed to increase the rates is 6.9%. And they can do that without really justifying. So if you picture this, insurance companies for years have been doing 6.9, 6.9, 6.9.
And that's annually, 6.9% per year.
Correct, annually.
Okay.
So, and there's consumer protection groups that are in place, which is a part of Prop 103 to help watch over the insurance companies and the Department of Insurance to make sure that the insurance companies aren't increasing the rates too much. So I think they've kind of artificially suppressed the rates for a while, but the insurance companies were able to get their 6.9 every year. They kind of maintained, but then COVID hit, rates kind of froze for a couple of years, and then rates froze, but inflation spiked. So you have this perfect storm of rates needing to go up, not being able to go up, not even their 6.9%.
So why were they frozen? Was that a government mandate? Was that some part of the things that they instituted during COVID?
That was a part of, yes, what they did during COVID, what the Department of Insurance did. They just kind of said, we're not going to allow rates to change. And it really stuck on the auto side, but it also hit the home side. And the home side is really where you feel it as realtors and as buyers and as not sellers, but as buyers of real estate. So what happened though is you didn't get 6.9% for 3 years. Rough numbers, for 3 years. So 6.9 times 3 is right. So you missed 21%, and then inflation went up by a good 20%. What's the math there?
Oh, wow. Yeah.
Rates are off by 40%.
Right.
Yeah.
So you have this perfect storm of rates being off by about 40%. And now insurance companies are not able to get the rates they really want and they really need to actually be profitable and to make money as opposed to losing money in the insurance market. And so a lot of insurance companies just said, we're packing our bags and we're leaving California because of the regulations and because we can't get the appropriate rate for the risk.
Okay.
Interesting.
Perfect.
Okay.
That makes sense. So yeah, if there's a 40% gap in between what you need to make and what you can make, that's not good business.
It's not.
I mean, unless you're a government, you cannot operate upside down.
You can't.
They don't allow me to operate my household upside down. They don't allow you to operate your household upside down. And a regular business can't operate in an upside down fashion.
So that's
Aaron,
what happened. Yeah. I got to add to it. Hey, Gary, 1 second. So let me add to this. So think of it this way, too. Insurance companies are big banks, too. They collect all the premium, and then they want to invest that money, get a rate of return on their money, and that helps offset those losses they may have had. But when they're not getting as much money in, and then they're not earning it, and they're paying out a lot more in claims, now they're even more upside down. So that's a bigger part of the picture too.
Okay. What was your
Okay,
question,
so
Gary?
yeah, I just want to have some time to process this and have my question. So, from my understanding, the insurance, the way they make money is that, of course, they protect they insure your house in case, there's a loss. If there's a loss, then you pay it off to build it up. So the goal is to have as least amount of houses being, I guess, lost to whatever, disaster might occur, and keep these healthy homes keep paying. Now, my question is, what happens in a down market? Like, this is the up market, right? Like, the cost of insuring a house to rebuild a house is more expensive. But in the case of a down market, what one would argue is that, well, if I'm paying for a premium and my house drops in value, my insurance doesn't go down in value in premium though. So what's the argument against that? Does it
So
make sense?
I think I'm understanding what you're saying. So when you think of insurance, insurance is not for what you're going to sell your home for. It's for the
Mm,
replacement cost of your home. So unfortunately, with some of our clients, they've lost their homes in the fires recently. They still own the land. They can actually
mm,
they can take their insurance money, move it, and purchase another home. You're allowed to do that in California. So you can take your proceeds and go somewhere else and purchase a new home, but you still own the land. So when you think about the land value, there's a lot of land value, but it's not insured because the land is still there.
mm,
So if I'm understanding you correctly, um, it may be an up market or up cycle, so to speak, with insurance, and the cost to rebuild is increasing because of
yes,
inflation.
correct.
So insurance companies behind the scenes, I think anywhere from 4 to 6 times a year, and I could be wrong. They actually adjust your cost to rebuild your home behind the scenes,
Mm,
like every other month, I believe, in their system. But only once a year does your policy renew to whatever their current valuation is. So
mm,
their systems behind the scenes are always accounting for what does it actually cost for a piece of lumber? What does it cost for pounding a nail? What does it cost for the permits? And so those are always being updated and they're constantly being updated in your policy, even though you don't see it happen. So
oh,
when the costs decrease and the cost to rebuild your home decreases, then your home reconstruction cost will decrease also.
I see. Would the premium decrease? I'm thinking about 2008 and the Grand Recession, where everything went down in value.
So will that happen again? I don't think it will.
Hmm.
I think that right now insurance companies are just trying to get back to breaking even and to even making a small profit, which they're allowed to do per
Hmm.
California law. And so I think that they're just slowly getting caught up to where they're getting to where they should be. And I know that we're seeing the headlines of State Farm's going to take another 20% increase. We don't represent State Farm, but 20% is really not that bad. And I hate to say it in
Right.
that way. It's not that big of
Mm,
an increase.
Well,
Um,
I mean, I know a lot of contractors and construction people, right? And the cost to build doubled during COVID, literally. And it hasn't gone back down that much, right?
actually,
I
it's going to
mean,
keep
I used to
increasing now with
estimate new
AD.
building cost at 110 bucks per square foot, and now it's 220,
And it's
just
going
as
to
an
look
estimate.
as it's going to keep increasing now that we have the new ADU laws, and people have incentive
Okay.
to build. So yeah,
So my next
I digress.
question, Aaron, and thank you for that. That's a really concise explanation of why. What is the state of California going to do about it, right? If they've helped if they've had a hand in creating this problem, what is their solution for it?
so the state of California, along with the players in the insurance market, they all got together a while ago. And they tried to come up with some new rules for the game. And
Okay.
they rolled out these rules in September of 2023 and said, we're going to work on this and we're going to fix it by December of 2024. So when they started out and they said, hey, we're going to fix it by the end of next year, which seemed like a very long time. Well, December 2024 is already coming on.
Mm,
Just 2 months ago, they actually finished their last set of rules and new regulations about how
Okay.
to try and fix the program. So the whole idea is to get insurance companies back to the market. That's the whole idea. We want insurance companies in the marketplace offering insurance because when there's more companies offering insurance, then there's more competition. When there's more competition, eventually the pricing will hopefully settle.
Right.
And that is a great thing for consumers.
Yes.
Absolutely. No, I don't think a lot of consumers understand that. The competition amongst providers creates a better atmosphere for us consumers, right? Because we're all consumers. I buy home insurance, I buy auto insurance, I buy insurance on more things than I want to, right? That's why when I play blackjack and they ask if I want insurance, I'm like, no, I pay for enough insurance in my life. I'm not going to insure gambling.
But Aaron, are we seeing the opposite though? We hear in headlines where insurance companies are leaving California, and this is a great market, and yet we see insurance, just leave, say we don't want to insure here anymore. Why is that?
I think those headlines are from yesterday. They're not going to
Mm,
be from tomorrow. So I think
Right.
that the insurance companies that wanted to leave are gone.
mm,
And they left due to the regulatory pressures, and they left because they didn't have adequate um, pricing on their insurance policies, and so they were losing money. So I think that the companies that are left standing and that are still here, they're in it. They want to be in it. So I
mm,
anything I've ever heard is insurance companies want to be here. It's just they want to be able to play in the sandbox and be able to have things benefit them, not have themselves be subjected to underpriced insurance policies.
Right.
So one of these new rules are reinsurance costs. If you're not familiar with insurance and reinsurance, reinsurance is what insurance companies have so that when they it's insurance for the insurance. That's the easiest way to explain reinsurance. So
mm.
I'll give you an example. In the Santa Rosa fires that happened several years ago now, State Farm had about 4 billion in losses from what I remember.
Wow.
They wrote a check for $400 million, and then their reinsurance paid the next 3.6 billion. So
Okay.
reinsurance picks up for the larger claims and the catastrophic losses that the insurance companies don't have the cash in the bank for. So they are insurance company, like they purchase insurance for themselves. So
Okay.
back to the reinsurance in California, we are the last state to allow insurance companies to use and to allow to allow reinsurance costs in homeowners insurance policies. It's never been allowed before.
Mm.
So a part of the new rules
So wait,
are
you're saying previously it wasn't allowed, and part of the new rules is they're going to allow it now?
that's correct.
Okay.
Aaron, I just want to make sure I understand. So you're saying that California is one of the last state to have this cost to be added on the to the home insurance. Is that what
Yes,
it
and
is?
it hasn't been
Okay.
added yet. The rules just
Mm,
passed 6 weeks ago. There are a lot of open hearings for the Department of Insurance. You can make public comment. They did all the regulatory things they needed to do to get this in place. But the last item, in my opinion, is the reinsurance cost.
mm,
Reinsurance costs in other markets and other states, on average, it's about 25% of the cost of a home insurance policy.
mm.
So we have not had that 25% baked into our home insurance policies yet.
Oh,
So I think in the next year, we're going to see our rates increase by at least another 25% because reinsurance costs will be added in now moving forward.
wow. That's
Interesting.
huge. I mean,
It is.
Is there any particular reason why California didn't have this reinsurance cost added into the policy?
I think it was a part of Prop 103.
Oh,
And Prop
so
103 really kind of it helped keep California insurance rates below market value. We
mm,
were one of the least expensive states with the highest risk. Now we're actually going to be a little more, I guess, priced appropriately for the amount of risk that we have.
wait, something in California was on the least expensive list?
It was.
that's what I'm getting at. I was going to ask because we hear a lot of the exodus of people saying that they're leaving for Texas or Florida because it's more affordable there. But as we have seen, like this doesn't look like it.
Not for
They,
insurance. Not for insurance in Texas and Florida. So I have to start out. I'm not licensed for Texas or Florida. My best friend lives in Texas. I've looked at his insurance once just because I was curious. They pay a lot more for insurance than we do. They've got hail, they've got hurricanes. We don't have hail, we don't have hurricanes, but we have fires and we have water damage.
they
Our
pay
water
more
damage is
they
what
pay more
kills us
property
here.
taxes as well.
They do, but they don't have a state income tax.
True.
Okay.
It's a trade-off.
Wow. So what I so we're going to see over the next 12 months everybody's insurance policy across the board seeing these reinsurance costs being built into their policies and their insurance policy going up. And this, of course, I can imagine the headlines over it, right, about the price gouging and the evil insurance companies and all of that. But really, we're just catching up to the current standard in insurance across the rest of the nation.
We are. We've been behind, and now we're just getting to where it should be.
Okay.
But it doesn't feel good. I mean, nobody likes to have their insurance go from $1,000 a year to $4,000 a year in 5 years.
Right.
Like you don't make that much more money in a year. Where like if everything went up by 400%, we'd have a problem.
Yeah.
But I think that it's just the state of the market, and I think that things are going to stabilize in the next 2 years, is my opinion. Like as I look into the crystal ball, I think more companies are going to be back to the market, and I think that that's a good thing. But we're still going to have sticker shock for the next year or two. These fires, everyone's worried about these fires affecting them. I think a part of it is already baked into the policies. Like, yes, catastrophic losses, they don't help anybody. They don't help the cost of insurance with any company, but they plan for it. They prepare for it. It is a part of the policy cost already. So it's just a matter of how much in claims are the insurance companies going to pay out over the next few years. That will help determine how much the rates go up to.
I
Okay.
see.
And go ahead, Gary. I'm sorry.
I was going to ask, this is a segue to my next question. I'm pretty sure Lucas is going to get to it, but I just want to connect that to my previous question, which is if we have a healthy amount of insurance companies in California, that promotes, I guess, a healthy economy of competition. How come we hear that in the fires these properties were insured by the government as opposed to private insurance companies?
So the insurance companies, the private insurance companies, can determine what they want to accept and not accept. And so for many years, they've looked at a lot of locations and said, these are very high risk areas, and we no longer want to insure these locations. So you read all the headlines about State Farm canceled so many people. Well,
Yes.
they're allowed to. So
Okay.
California law, as long as you receive a notice of non-renewal with it, but 75 days or more before your policy is supposed to renew, you're legally, as an insurance company, they're legally allowed to cancel you and not renew you. That's what the law allows, a 75-day notice. So everybody becomes aware that their policy is going to be canceled. It's just a lot of people don't always open their mail to read the notifications that they're going to be canceled. But yeah, the insurance companies, they are looking at the models. Part of the other new rules are insurance companies are allowed to use future modeling, not just past models. They're allowed to use new technology versus just the old technology to help determine rates and exposure. So they're kind of getting caught up on using today's standards as opposed to yesterday's standards. But I know that it's not easy when you lose your insurance. And yes, there is the state fire insurance company, which is the California Fair Plan. The Fair Plan limits their policies to a certain amount of coverage per home. And it's 3 million total per location for a
Oh,
house.
wow.
That's how much you get?
No, that's the total maximum that you can insure.
Yeah.
So what that means is if you've got a 5,000 square foot house in a high fire area, you may not have enough coverage in the Fair Plan to cover your home. If you've got a 2,000 square foot house, yes, there's probably enough coverage and a lot of extra room in that policy. However, it's some of those homes that were a lot larger that are going to cost $1,000 a square foot to rebuild. There's not enough coverage in the Fair Plan to cover them.
Wow.
I have seen some of these houses. The the cost of some of this are 17, 25 million dollars.
Yeah, you're talking about the resale cost, not the rebuild cost, though, Gary.
Oh, okay.
Right. And that's why Aaron's talking about price or per square foot, because we're talking about a rebuild cost of per square foot. How much is it going to cost to rebuild that house in the exact same way that it was when the incident occurred?
So in the event that it costs more than $3 million, you only get 3 million though. Whatever is over is on you then. The
So
homeowner.
whatever the company was, whether it's the Fair Plan or any other insurance company, you have limits of coverage on your policy. It's the insurance policy is a contract, and it is what you and the insurance company are agreeing to, that is the maximum amount of coverage that they will pay out for the premium that you're paying to them. So whether it's $1 million in coverage or $3 million in coverage or $10 million in coverage, all of your coverages are listed on your policy. And those are the limits per category that they're willing to pay out.
I mean,
So
it's the
they
same.
went.
It's the same in all insurance. It's sorry to interrupt you, but it's the same in auto insurance, right? When I got my auto insurance, right, I looked at the limits of my coverage and decided that those limits might be below what my liability might be. So I got an additional umbrella policy to cover me in case I exceeded those limits.
Makes sense. It's similar that your bank is FDIC insured for up to 250,000. So if you have more than that, and the bank goes bankrupt, then that's it. So I get it now.
Yeah, and
Okay.
I know it's hard because I know in real estate, everyone looks at purchase price and sales price and things like that. And that's one of the big differentiators with insurance. Insurance is replacement cost of the structure, not list price, sales price, things like that. And depending on location, you get closer to the coast, there's a lot of land value that goes into that purchase price. But as you get a lot further away, you get towards our border over towards Arizona, there's almost a negative land value. So it's really interesting looking at insurance from coast to inland of how it compares to what the purchase price of a home is.
Well, yeah, because literally in California, we have $1 million views. That piece of property could be located in a place where the view is worth $1 million.
Yes.
Literally, yeah.
Okay, thanks, Aaron. That's really concise. I appreciate it. My last question is, and I think this is the one that's burning everyone's mind up, is how is all these wildfires, right? We lost 12,000 homes. Some of them, as we've covered, very high-end homes. How's this going to impact insurance in California going forward? For not only those people who are trying to rebuild, but for the rest of us.
So I think right now, and this is something that we kind of forget about, when there's an active fire, insurance companies don't want to write new policies in those zip codes or counties. Now that those fires are 100% contained, a lot of those moratoriums are now lifted. And those insurance companies are able to write new policies once again. So it's really challenging for you when you're in escrow and you have a pending closing. If it's in the zip code where there's a fire or a fire close by, you can't start the insurance policy until that fire is 100% contained, usually plus a few days. So that's one challenge. As far as moving forward, I think I was on a webinar for one of our insurance companies a week or two ago, and we were talking about, homes that were completely destroyed. This particular company said, we will maintain the policy. You can reduce the coverage down to $60,000. We will actually maintain that policy and even keep it going while they rebuild their home as well. So that way the liability stays in place. It's a minimal cost now to keep that policy going. And as they rebuild, then the coverage will grow with it. So I don't know if every company does it that way, but I was really impressed to hear that the insurance companies want their clients to just have some continuity and some ease of use in their policies.
Yeah, that's what it seems like. It seems like they want to maintain that customer relationship and serve those customers through that disaster to make sure they're taken care of.
They do. And it was like, it was nice to hear how great some of these insurance companies are trying to take care of people, and they want to pay out claims. And I know that another topic we can get to are trusts and adding your name to your insurance policy if it's in a trust, because I know there's a lot of social media buzz about that, but we'll come back to that in a moment. So to answer your question though, of how will this affect us in the future? I think that, it is getting harder to insure in certain locations in California. Like that's just plain and simple. A part of those new rules and regulations to add reinsurance costs to those home insurance companies is those home insurance companies have to be able to be willing to offer policies to 85% of the market that they have.
Okay.
So it's kind of weird to dissect this a little bit, and I don't want to get caught in the
What's
minutia of
defined as the
numbers.
market? Is it that area, that neighborhood, that zip code? Is it that city, right? So if you want
I
to do
think it's their
insurance
market
in
share.
Pacific Palisades, do you have to be willing to insure 85% of Pacific Palisades?
Be willing to offer coverage to 85%.
Okay.
Oh, I
So
see.
it doesn't mean you have to insure 85%, but at least offer it. So that's the way I kind of understand it. And I could be wrong, but so part of it is offering coverage to at least 85% of the market. Doesn't mean you're writing all 85%, but you're at least offering it. So I think in the long run, the whole goal is they want insurance companies to offer coverage to more people. They want less policies in the FAIR plan. They want they want to bring policies back to those insurance companies that want to write in California. And I know a lot of those insurance companies don't necessarily want all the risk
Right.
because there are some higher brush areas, but they're trying to get everyone to play nice in the sandbox.
So
Eh,
on that note, and I know that this has been a struggle for a lot of people, is there were people who were in those high fire areas who received cancellations and were gapped between getting approved for the Cal Fair plan and the cancellation of their insurance. So what's their do they know what they're going to do with those people who were essentially uninsured at that time?
So hopefully they didn't go uninsured, meaning you know your definitive date of when your policy does not renew when you receive a cancellation notice. And
Right.
so hopefully people started a new policy, even if they were underinsured with a fair plan, at least had something. But the fair plan for a lot of those larger homes, it's definitely not enough coverage as we talked about. And there are additional fire policies beyond the fair plan that are available. They're not
Okay.
inexpensive, but they're available.
hmm. Aaron,
Anything for the right price.
Aaron, do you foresee more cancellations from the insurance
Crystal ball
company?
time.
I I think we bottomed out. I
Oh,
really
okay.
think we have. I think
Okay.
that the pendulum is starting to swing the other way. I know that the headlines are still there of, State Farm canceling 72,000 policies this year.
Well, that's what sells, right? Sex and violence sells, bro.
I know it is what it is. I think the main thing, like if anyone is going to hear anything I'm saying today, it's open your mail when you see a letter from your insurance company. Make sure you read your mail. Pay
I see.
attention to what comes in. Make sure you're not delayed on paying your bills for your insurance because if your policy cancels due to non-payment, it's gone. You can't get it back.
Mhm.
Um,
And here's my other question though. How does it affect does it affect those homeowners that are living in areas that are not prone to fires? For example, my area is the serve is San Gabriel Valley. There's hardly any fires here because we are not anywhere close to the mountains or even to the coast. So we're about 60 miles from the beach, even for Palisades. So from what I hear is that they're going to increase the policies, let's say in Sagura Valley, to help cover for the losses incurred in the fires. How accurate is that statement?
I think it's pretty accurate.
Hmm. So
But
everyone's going to get affected.
I think everybody does because when an insurance company files for a rate change, they are filing it for the whole state.
Hmm.
And they're going to say, here are the characteristics of this section of properties that we're going to increase the rates for. So in those higher fire areas, their rates are going to go up more. And the lower fire areas, those policies will not go up as much. So on average, when like a state farm says we're going to have a 20% rate increase, some homeowners might receive a 100% rate increase, others might receive a negative. And it all depends on where they are, what kind of risks and exposure they have to brush, to the age of their home, age of their plumbing, all those sort of items kind of play into it. So a 20% average is for the whole state.
Including Northern California, then the whole state.
The whole state.
And you mentioned negative. What areas are going to be negative?
I don't know.
I was just gonna
Gary's
refund.
looking to buy his next house. He's just going to move into one of those areas and get cheaper insurance.
I mean, I got to tell you, we get a renewal notice every single day for our agency, and we look at what the prices are changing and how much they change. And typically, we're seeing a 30% rate increase on home insurance. That's typically what we're seeing. Every once in a while, we see a couple percentage point decrease on either a car or a home, and I think that was a miracle.
Wow. Okay.
But it happens. But it happens. So like, I mean, I had a client call me last week and he goes, "Hey, my home insurance, my coverage went up, but my rate went down by $200 for the year." And he's paying a lot for his insurance, but he noticed it and he said, "Why is that?" I'm just like, "You're one of the lucky ones this year."
Lucky draw.
Count your blessings.
Awesome.
Perfect. Perfect. Anything else we need to know about insurance? I mean, you mentioned a couple other things, adding them to a trust, things like that. Anything else we need to know, Aaron?
I think if anyone's out there and you have a trust and your home is in a trust, talk to your insurance agent. Send in the trust information and just say, "Hey, I want to add my trust to my insurance. I want to make sure it's included just in case."
Oh, that's
I think
good
what
stuff.
happened, I mean, what happened on social media and what the big buzz was about, which I don't think everybody understood the whole story, is if you think about it, people lost their homes. Inside their homes were copies of their trusts. Those trust documents got burned. So now you have an insurance company that says, "We don't know if you're the owner of the trust or if you're not the owner of the trust." And they don't want to write a check to the wrong person. So they had to slow things down to help avoid fraud and make sure that they're writing checks to the right people. So it creates an additional process or a couple extra steps of just making sure that the insurance companies are verifying that the actual owners are the owners of the trust of the home before they write a check.
That makes sense.
So that
And
would be the reason
I've
to add
actually
the
known
trust.
people who were taking those important documents and keeping them off site, like in a safe deposit box, instead of in the home, in your fireproof box.
Well, in those fireproof boxes, I've talked to a locksmith. There's different fire ratings for those fireproof
Oh, I know.
boxes.
I know different heat ratings and different number of minutes that they can withstand.
Yes. So if you
Right.
have a 1 hour fire rated safe, it's gone. I think you really need like a 3 hour fire rated safe for it to actually not be burnt to a crisp.
Really?
A 2 hour, I think it survives at like 75 to 90% of the contents.
Okay.
That's
Good
what I've heard.
information. Good to
I'll
know.
put it in a bank safe then.
I think mine has a 90-minute rating, so I should check that.
Find a safe deposit box.
Yep.
Yeah.
Well, of other things in there, but we won't get into that on this.
Yes, ex-cop. Yes.
Okay, perfect. Well, Aaron, if people have questions about insurance, how would they get a hold of you?
Yeah. Call anytime. My office number is 949-484-7500. Again, 949-484-7500. I have a team that's here. So if I can't answer your call, my team can assist as well.
Absolutely wonderful.
Awesome.
And I can tell you from my personal experience dealing with Aaron that he always strives to serve people and to focus on what serves you best as the consumer, even if it's just answering your question and making sure that you're certain about what's going on. So thank you, sir. I really appreciate it. I'm Lucas Smith. I'm broker owner, Sell My Home Real Estate. You can just call me at my cell, 714-356-7142, or you can go to sellmyhomerealestate.com. And Gary, how do people get a hold of you?
It's easy. Use search hashtag Gary Yao.
Hashtag Gary Yao, baby. All right. Hey,
Yes.
thanks, you guys. I really appreciate you being here and participating with us. Aaron, thank you so much for all the great information. It's been a pleasure having you on.
My pleasure. Thank you both.
Thanks, you guys.
Thank you.
Appreciate it.